Hey traders, checking in on the stock market today. So we started daily consolidation in most places yesterday, but so far it's very short-lived with a bullish reaction to Powell today. We'll talk about that, and we'll go over a trade that I made that I'm still in, that I had no intention to still be in, and how that played out. All right, so the current setup is a bit tricky because the futures charts look a lot different than our ETFs and regular trading hours. So you need to determine which you're putting more weight into, and there's no right answer whether it's one or the other. And just as an example, we can see here the S&P 500 futures, higher low every single day. Today's a daily inside bar, pretty much a double bottom and a double top. But if you look at SPY, it's a lot different. SPY started daily consolidation yesterday. It set a higher low, and today is a higher high. So I'm certainly paying attention to the double top on the futures charts, because if we reject from there and have a red day tomorrow, then we won't see any follow through. And we can see there's our double top, little double bottom with pre-market levels, and plenty of space for a 4-hour higher low overnight if we do continue to consolidate from here. So I am going to be paying attention to this futures chart resistance a bit more. You know, are we in an uptrend right now? I wouldn't say that it is. Again, it depends. If you show me SPY, I would say it is a clear little higher low into bounce continuation. I would then zoom out and say anything under 458.12 is just a weekly lower high. But if you show me the S&P 500 futures chart, is it a daily uptrend? I would say no, not yet. So again, it all depends on the individual and what matters more, which ticker matters more to you, whether it's futures or the ETF. The ETF has a lot more dollar volume. The futures chart has more data in terms of more hours being traded. So again, there's no right or wrong answer. Today was interesting because the bears started to take complete control. You know, the morning was a little bit of a battle, and then bears took control of the morning, and it looked like we were about to see a solid, really just continuation of the consolidation that started yesterday. And then Powell started speaking, and a couple little headlines started trickling in. One bullish headline, as we know. Again, it's always the charts for me, but I want to know, what is the market going to perceive bearish? What is the market going to perceive bullish? And at this point in time, the market will perceive anything with China and Taiwan as bearish, and it'll perceive the Fed saying we're going to raise rates until your head spins. It'll perceive that as bearish. The bullish headlines are any kind of diplomacy and easing of tensions between Russia and Ukraine. So a headline came out that they're going to have some talks tomorrow. Don't expect that to be a real bullish reaction in the market, but it's enough for a little bit of momentum. And then really the momentum today was when Powell started talking about saying, you know, we were going to be looking to raise rates every meeting from now until, I forget what he said, but pretty much they were going to raise rates every meeting. He said until, you know, before Ukraine, that's what we were going to look to do. So the tone was a little bit more dovish as opposed to hawkish. And the market perceived that, in my opinion, as saying, okay, well, maybe they're going to pull back the reins a little bit in terms of the amount of raising of rates that they were anticipating of doing before the Ukraine-Russia situation. So that really shifted the entirety of momentum for the day, because that was right here when a 5-minute bear flag failed. And then from that point forward, we just had complete bull control for the rest of the day, essentially. And so for me, that's very notable. And here after hours, hourly consolidation is now taking place. And it's healthy hourly consolidation at this point. But again, that double top is there. Best case scenario for the bulls, of course, would be a little cup and handle here if this were to bull flag and break bullish overnight. So at this point, in my opinion, the most important headlines are what is the Fed going to do with rates here in 2022? And that's going to be the headline that we're reacting to most, unless something significant were to happen. But that's what I'm watching for in terms of headlines and reactions. And again, just knowing that I was looking for that to be a bullish headline and knowing that it was enough of an indication of that, it shifted my game plan on a day trade for NIO, which I'll talk about in just a moment when we get there. So the NASDAQ is the same thing. Daily inside bar today. Again, you pull up QQQ and it's a different look. We had a brief little pullback. We haven't broken the high of 348.54. It's a double top. We broke it by 5 pennies, but that's a double top. And so we have pretty much the most important thing is we have double tops at the high right now, and we have plenty of space for higher lows to form, but the bulls must break these double tops if we're going to see bounce continuation. And breaking those resistances, again, every time this bounce gets a bit more follow through, it puts these short-term shorts underwater. It keeps pressure on them. And you better believe yesterday, a good bit of shorts entered positions for daily consolidation. And after today, they're a little bit less sure of those positions. But they're holding on to them as long as that resistance remains. So if we reject, they're going to stay in their positions. And if it breaks, some bears are going to cover their positions and add a little bit of fuel for follow through. So again, just always keeping that perception of what would I be looking for if I'm bullish? What would I be looking for if I'm bearish whenever I analyze charts? I want to put myself in both, not hooves, paws and hooves, essentially, rather than shoes of the opposing side. So SMH, daily high or low, trying to form. It's also notable we didn't change hourly trends. That's another pause. That's another pause for bulls to say, okay, good day, but we still need the hourly trend change. We came right off the low of yesterday, and we're bull all morning. We need that higher low and higher high to have confidence in follow through. So SMH would have to break 270.86. If we do not break that level, bulls don't prove anything. So we need an hourly trend change and a break of that level for bulls. And anybody that changes the daily trend and has a little higher low and higher high, we then zoom out and we watch our weekly resistance, knowing the weekly downtrend is key as well. So NIO and Tesla were weak today to start, and they started their daily consolidation. They were stronger yesterday. They did not start their daily consolidation yesterday. They broke the low of yesterday today to start the pullback. And I was watching for hourly oversold conditions, which we did not see. And again, it was a complete momentum shift, but we have not changed the hourly trend back to the bulls. So Tesla bulls are attempting a very quick higher low, as is NIO. NIO bulls must break 23.35 to confirm the trend change. Then we zoom out and we look to weekly resistance if the bulls are able to pull that off. So I traded NIO today, and I'm in a position right now that I did not intend to be in. So I often put myself in positions and then things happen in terms of the trade playing out in ways I did not anticipate. Obviously, my stop's in place, so it wasn't a negative. You know, I'm not underwater and have no idea if I should exit. It's a good thing. So a bull move develops more significantly than I anticipate, which shifts my game plan a little bit. So I'll go over this instance where NIO just absolutely dumped on the morning. And I looked at it and the 5-minute RSI was down in the low 20s. Okay, paying attention to that. I know I care more about the hourly RSI. All right, hourly RSI is just getting oversold. The 30-minute RSI hit the teens. The 15-minute RSI hit the teens. If you know me, you know that's what I want. I want the hourly hitting oversold, and I want every single other time frame oversold as well. Because what that allows me to do is to position. And even if the hourly bounce does not get started when I make my entry, a 5-minute bounce can take place and allow me to maneuver around by selling partial, which is exactly how it played out. 2-minute RSI got down into the teens, so when all those RSI levels got down into the teens, I was making an entry. I made my initial entry on the break of 21 psychological. I like when things are oversold and a psychological breaks for a potential short-term climax. I then had a game plan of entering a second position if right around 2080. So I'm in it 21 or 2098, 99, something. It was literally right when it broke. I market bought. So I think it was 99. And then I said, all right, I'll make a second entry at 2080. And then I place my stop based on the dollar risk that I'm willing to take on a full position. I changed my game plan because at that point in time, I was looking for QQQ to give me a 15-minute higher low compared to the low of the day. And that's what I wanted to see to get the NIO bounce going. And QQQ fell through support significantly. This was a big red candle. And so that made me pause and be a bit more cautious. In hindsight, the trade would have worked out perfectly and I would have had a great average and a great full position had I stuck to the original game plan. But I'm okay with the shift that I took because of the acceleration to the downside. One other note that is important that I just forgot is I entered a bearish trade on SQQQ, top fishing 345. So look at pre-market, we have a triple top just under 345 on QQQ, and we hit a new high of the day. And I know a new high of the day on QQQ with no trend change, I don't trust it. And we often see a new high of the day with no trend change, get no follow through. So I shorted a little bit too early. I entered my short. In hindsight, I should have scaled in 2 positions, but I just entered a 1 position, one and done, right around 344. And we did end up rejecting from that resistance, so that went well. but I did not like my positioning. It wasn't as comfortable as I wanted to be. So when we pulled back for the 5-minute high or low, I exited half right around break even just to get some size back. Normally, if I had a good entry, I'd be exiting half to then be in a risk-free position. But because I was a little bit too early, I was exiting half to just take a little bit of risk off because I was too early. We then rolled over, and I'm in SQQQ. So again, that's important because as I'm taking the NIO bounce, it's counter to my SQQQ trade. And essentially, I want to get into a position where I'm risk-free on both, and I'll stop out of one, and the other will be nicely profitable. Because again, they're essentially inverse of each other, not directly tick for tick, but for the most part, they have a inverse. QQQ and NIO have a direct relationship, so SQQQ is inverse to NIO to a certain degree. So I have an SQQQ position while this NIO trade is going on. So I enter, I'll break at 21, and I pause a little bit, and then I just watch and I say, okay, 2-minute bear flag, some short-term RSI levels are cooling off, and I'm just not thrilled and comfortable. And so then a big bounce takes place, didn't sell anything at that point, and I'm just patiently letting this trade play out. And this trade was for a 15-minute oversold bounce. That was my goal for this trade. And 15-minute RSI cooled off a little bit. So I just was very patient here because, again, I've got positions on opposing sides of this trade, and I just want to know who's going to win. Are bulls or bears going to win here? Then I recognized that NIO was forming a falling wedge. So rather than entering a second position, I said, all right, I'm in my one position. It's either going to bounce or it's not. And at that point, I was almost writing NIO off as an uneventful trade on the day. And I stuck my stop under 2070. My stop was 2069, and I let it play out a little bit. And then we faded, and we hit a new low of the day we double bottomed. So first off, it's a new low of the day by 2 pennies into a bounce, by 2 more pennies into a bounce, double bottom, bear break by a penny into a bounce. So I recognize, okay, I know NIO. NIO likes falling wedges. I'm recognizing a falling wedge, and I am pulling my stop. I'm not going to stop out at 2069. And again, at that point in time, it's a very small loss. I'm not close to a half-day loser down at 2069. So I'm going to give more wiggle room for this trade to play out. And I recognize the falling wedge, and then I do enter my second position because I recognize the bear breaks with no follow-through. And at that point in time, at 11, just past 11 o'clock, again, this entire trade, I'm staring at QQQ. What is QQQ doing? And QQQ had a big bullish reaction to Powell speaking that did not get much follow-through on NIO. But then I noticed, and again, this is watching correlation. So, man, NIO is not benefiting at all from this big QQQ bounce. On this pullback, I'm scouting a QQQ 5-minute high or low. And it ended up being a nice little inverse head and shoulders. But while this consolidation took place, we're down here at a big red drop at 1050. And I look at NIO on the 5-minute candle. What are we doing at 1050? And the answer is not nearly dropping lower. We hit a low here, and QQQ is consistently dropping down. NIO is really slowing down. This tells me that there's buying going on as bid support, essentially, to prevent from another significant leg down, while QQQ sees a clear leg down. We didn't benefit much from the move up. It was very short-lived, but on the pullback, we also did not get much bear follow-through. So I did enter a second position, and that was at 2080s on this break right as it took place. And then I sell half my position into the move up, and now I'm real comfortable. So now my break even is down around 2080 or so, and we never revisited that level for the rest of the bounce. And at this point in time, I'm saying, okay, bounce is underway, but I'm noticing the very notable strength in the broader market and the bullish reaction to the potential backtracking of the Fed. And I say, all right, well, that might be our higher low on NIO. I'm going to swing this position. I've got low risk, almost risk-free, and I am swinging this position. We have to change the hourly trend. I'm well aware we have not done that yet. So that has to happen tomorrow. And if we change the hourly trend to the bulls, that's our potential daily high or low. So long story short, that was essentially my trade of the day. I stopped out of SQQQ when QQQ hit a new high of the day. And a couple more times, I attempted top fishing plays on QQQ, and I must have stopped out break even 3 times into the end of the day. But that's A-okay with me because that's protecting my NIO swing position. where if QQQ drops down into hourly consolidation, I have a position benefiting my SQQQ, but because we just kept hitting higher highs, I stop out, break even, I stop out, break even. How do I keep getting in break even positions? I'm really zoomed in and I'm looking at short-term setups that favor short-term consolidation. I very quickly sell half. So for example, I see a 5-minute bull flag confirm with no follow through. Okay, I'll enter an SQQQ position there. We pull back, I exit half, then I stop out on the new high. I did that 3 times, 3 break-even stop outs. Yes, it was work, it was effort, but I protected NIO. In the end, I didn't need to protect it, but had we started hourly consolidation, NIO would have started hourly consolidation, and my account wouldn't have dropped. So that's how I played the day. And again, it's just a scenario where I was not anticipating swinging NIO, but I got in a nice, comfortable position. And if it's a daily high or low, just like the last time I played the NIO daily high or low, it went real well. So maybe we confirm a trend change and this one goes real well again. I don't know if that's going to happen, but I'm positioning myself in a low risk, high reward scenario in case it does happen. And Tesla's the same setup. Just a little bit less consolidation on the daily. It did not get as oversold. And Tesla's right back up to testing its recent high. And if you're looking at Tesla and saying, well, is that a daily trend change? This isn't clear to me. I'm not sure. Just zoom out. Go to the 2-day time frame and say, okay, 2-day time frame. Clearly, we need a more significant trend change if we're going to call it one. But the bulls have bounce control still. We can say that much as well. XLV, lack of clarity the past couple days, but we're up at the bounce high. Zooming out, we're watching weekly resistance. The most important level is 134.46. There's a potential setup for an inverse head and shoulders if we were to get a bit closer and then reject. That would be something to be watching for. But honestly, I am unsure of how we are set up in the broader market right now. And I want to position in case the bulls take back over and we hit our buy the news climax low. And so that's what I'm slowly doing. And I'm also going to be day trading bearish, as I'm not convinced that the bulls are going to take over. So it is perfectly okay to have no idea what direction the market's going to go. That either means you don't trade until you have clarity, or if you have more experience, that means you position yourself in both directions, and one of the directions will give clarity eventually. So that's the route that I am taking. And again, it's so important to be able to admit to ourselves, I have no idea. I have no idea if our bottom is in or not. I have no idea if the bulls are going to take over for the next month or if we're going to drop to fresh fear lows. And every single day shifts my probability needle of what's the most likely scenario. But I do know the weekly resistances matter to me. And I do know that XLX triple bottom at the fear low is very important to me as far as the broader market is concerned. So we had a triple bottom. We double topped at the high of yesterday. We have not changed the hourly trend. Big dump, big bounce. Generally, we would be expecting the financial sector to not be going up if we were going to be looking at less rates being raised, but it went up. Maybe that's the market saying, I don't believe you, Powell. But whatever the case, we need an hourly trend change. And if we get it, we're going to have a bit more conviction in this triple bottom. That being said, anything under 39.20 is just a daily lower high. But we got a wall in the sand, line of support. Line in the sand, wall of support. If this level breaks, my probability needle on the broader market, whether I'm bull or bear, definitely takes a tick bearish. As long as this level is support, that to me is a little bit of a bullish indication. But the bulls have proving to do, starting with an hourly trend change. Everybody today that was strong, I won't say everybody, but the vast majority of names and sectors need hourly trend changes. IWM, bounce high. Clear daily high or low, 197.80 is clearly support. Great break of that resistance, 2 levels left, 207.27 and 209.05. It's a weekly double bottom, and we're approaching weekly resistance. If we reject from weekly resistance, we can remain within this tightening range for a bit longer. Bitcoin is doing the exact same thing as IWM. Slight difference is the weekly high or low was a little bit higher, but it's the same setup. And it's had a correlation, Bitcoin and IWM, for a while now. So nice day. Again, it looks like, oh, we're about to consolidate and retest our fear lows. And bulls today said, nope, we're not done bouncing. We're keeping short-term control. Bears are keeping longer-term control as long as there's weekly lower highs. But bulls are keeping short-term control of this bounce. Biotech sector broke the double bottom of the last 2 days with no bear follow-through, but still EMA 12 resistance. Bulls must get over 91.36 to be back in full control of the short-term bounce. Keeping in mind, the weekly downtrend is our long-term guide. That's been a nice and clear guide for a long time. And if we do not break 99.16 long-term, bears keep complete control. That's another way I shift mindset and view charts. You should have it different unless, we're trending on every single time frame. If someone asks me, am I bullish XYZ ticker? What time frame? My time frame, my viewpoint on the hourly can be completely different as my viewpoint on the weekly. So your viewpoint on a ticker and your analysis should shift based on the time frame. TAN, daily consolidation underway. We came close to hourly oversold, but not quite there. I'd like to see another leg down into hourly oversold conditions to scout a daily higher low off EMA 12 support. We'll see if we get it, but I am scouting a daily higher low in the solar sector. Bear volume compared to bull volume is what the bulls want to see. No red flags on the consolidation at this point, and it is definitely a possible bull flag still. As long as we hold daily EMA 12, it's a possible daily bull flag. Oil. So oil is wild volatility. Look at this drop. 6% drop straight into a 7% bounce. We got a double top at 112s. It's a potential little cup and handle with the hourly bull flag at the moment. 4 hour is our guide. Right off, did we hit 15-minute oversold? And this comes from crypto. If I'm looking for a 4 hour higher low in crypto, I love when EMA 12 on the 4 hour aligns with 15-minute oversold conditions. And oil just was the perfect example. Bitcoin did it as well. Today, Bitcoin hit 15-minute oversold conditions. It was a short-lived bull move, but we V-shaped 15-minute oversold right off 4 hour EMA 12 into a V-shape higher high. Granted, it didn't stick. Bears are defending weekly resistance there, but oil did the same thing, not at the same time. It's the same technical setup. Traders like myself apply that technical setup to different instruments and different time frames. Pretty cool to see oil and Bitcoin do it in the same day at different times. They're not correlated when they're doing it. It's just a technical setup the traders look for. Oil bulls have complete control as long as 105.18 holds. 4 hour uptrend is our guide, and it is a potential little cup and handle at the moment. Speaking of cup and handle, talked about the silver setup yesterday before consolidation really started. It's a potential cup and handle. And yesterday said that we were looking for it. Now, I know I've just said cup and handle 6 times. Cup and handle is one of the least common patterns, and it's one of the most talked about patterns, which to me means it is the most incorrectly identified pattern out there. I see it in social media all the time. It's because bulls want their pattern to be cup and handle, because that's the most power, that's the breakout setup. This is a cup and handle. So what you need is a rejection from resistance. The right side must be lower than the left. I see a lot of people call cup and handles where the right side is way higher or the right side is not even close to the left side. You need to be right up next to it, and you need a bull flag. So I do the retracement measurement. Is this a bull flag coming off the low to the high of this bounce? Yes. So we don't have to go straight up to a higher high from here. If we reject and then form another higher low and then break bull, that's still well and good. The simple statement is, if silver holds 24.85, this is a cup and handle. The burden is on bears to break 24.85 to prove it is not a cup and handle and prove a 4 hour downtrend. So I was watching SLV today and I got distracted with NIO and SQQQ, but there was a nice setup here where the momentum shifted. Double bottom at the low of the day by 1 penny, 5-minute trend change confirmed, and from that point forward, bulls saw significant follow through. So that was one where I was, just wish I had a little bit more attention. But again, I know myself, I know who I am as a trader, and I know that I am a much better trader when I'm focusing on 1 or 2 trades at a time. And as soon as I start stacking on a bunch of trades, I don't do as well. But Silver Bull is looking good as long as 24.85 holds. Is gold a cup and handle? The right side of resistance is not nearly as close to the left. It doesn't look nearly the same to me. 12-hour, we're scouting a higher low, but silver is where it's at for the potential cup and handle setup. CCJ is not starting daily consolidation. Bulls are keeping complete control. This was another name that I was scouting a daily higher low on, but gotta sit patiently because it's not consolidating yet. Need to wait for that trade to come to me. And MARA, same thing. Daily inside bar, and that Bitcoin bounce on the morning kept those bulls strong. And actually, I would have expected, we were in an uptrend from 11 to 4. Bitcoin was not. So that's interesting. 11 to 4. Bitcoin's in a downtrend. They were inverse for 3 hours there. That's very interesting. So that, in my opinion, is MARA focusing more on the correlation to the broader market and the NASDAQ than to what Bitcoin itself is doing. Coin did it to a certain degree. So now I'm just checking, was it an anomaly or is the sector doing it? And it's the sector. Very interesting. All right, I'm done talking. Do good things. Have a good rest of your day. See you tomorrow.